us. He's the mentor to our trading team, 30-year professional trader, worked all around the world, and is going to give us his view on the markets. Julian, over to you.
Hey, Paul, how are you? Hello, everybody, wherever you are in the world. And look, welcome to, I guess, another trading week. It's going to be an interesting one because it's the Easter weekend. And as a result of that, we've got some people may say there's a quiet. Normally, it's a quiet time that we go into around April time, but I always see this as being quite an interesting and exciting area. The end of the quarter, and also normally is a time for a lot of trend changes around the late tail end of March and the first couple of weeks of April. So we're on the lookout for some trend changes. Now, what do I mean by that? I mean longer term fundamental shifts. So couple of things I'd like to talk about today to highlight with everybody. For I believe the best part of now about 4 months, I have been quite bullish on the US dollar and quite bearish on the currencies overall. Now, some of them have performed okay, some of them haven't performed okay, but let's think about the euro is a really good place to start, and maybe the Swiss franc as well too. And so looking at those core European ones, I am beginning to be a little more bullish towards them, right? So the US dollar rally may be coming to an end in those two. So how is that going to play out? Well, it's going to play out, I think, if we see a movement in interest rates. So for the last 3 or 4 months, we've seen US interest rates rising, and I'm expecting that at some stage over the course of the next 3 to 4 weeks to stop and maybe reverse. And when that does happen, I think there's going to be a shift in that US dollar dominant theme that really has dogged the euro for some time. In my mind, the euro never made it to 125, which was frustrating. But it also means that if the euro does go up again, clearly the next leg is going to be up to the 135 point. Now, why would that be the case? Why are people going to start to think about the US dollar to go down again? Well, it's because they're spending quite a lot of money. You know, we can go through the economics. You guys all know this, right? A big fiscal stimulus program, lots and lots of government spending. And also a rising interest rate market normally tends to lead to the currency to appreciate. That's sort of classical neo-economics, right? But here we are again in the situation whereby interest rates have gone up quite substantially. I'm not sure the Fed wants to see long-term interest rates much higher. And at some point, you only pull the piece of elastic as, far enough. Short-term rates are still flat. So we've got that piece of elastic being pulled further and further and further and further, right? At some point, it'll have to snap back because people will take advantage of that yield curve difference, right? So 10-year rates up at 1.6 and short-term rates still stuck around 0 or a few basis points. At some point, that's quite an attractive spread for people, and they'll start to arbitrage that difference out. So in other words, flatten the yield curve. Okay, that's called a bull flattener in this case. So I think that could be, I'm not talking about a big move back down in interest rates in the long end. I'm just talking probably about a stabilization and possibly a drift lower. That's the sort of thing, I think that's the catalyst, is all you need for the currency movement to start up again. So be on watch for that. I think that could be quite important. If the unemployment numbers are as disappointing as the inflation numbers were last week, the PCE came in lower than people thought in the States, and that's going to give people pause for thought, right? We've seen a few of the economic numbers come through now a little bit weaker than people were expecting, so we've got to keep an eye on that, and it may mean that unemployment is as sluggish, right? So that's rates longer for lower. Lower for longer. I mean, that's what Powell said, so we might respect that. And when people think about it that way, then they'll probably end up thinking those 10-year rates are a little bit too high at the moment. So that's a key driver for me over the course of the next couple of weeks. I'm beginning to change my view, but that's not held everywhere, right? So you might well see a different pattern unfold in some of the commodity dollar currencies, the Aussie, the Canadian. The Canadian certainly technically still trades a bit of a dog. Well, the US dollar CAD rate trades like a bit of a dog at the moment. It still seems like it wants to try and go down. We'll see how that works over the course of the next few 2 or 3 weeks or so, the next few days. Really important, could be a turning point for the Canadian dollar. Again, didn't quite get to my target levels around the 118 mark. So maybe we need to see that a little bit lower, and that might well end up proving to be the case. But if it doesn't, and it starts to head back up again, that could be interesting. So there's some different forces at play here, right? So when I'm talking about the US dollar strength starting to wane, that's a euro and a dollar Swiss type of theme, if you like. The commodity currency is a little bit different. They would require oil to go down, I guess, and some of the steam to be taken out of the commodity market, because at the moment, as you know, commodity prices were a lot higher than they were last year. Call it a supply constraint, call it a secular commodity rally. I'm not quite sure what it is, but obviously prices are a little bit higher than where they were 12 months ago, for sort of obvious reasons, I guess, with the COVID. But I think there's more to it than that. I think there's some supply problems too. And that's going to be, I think, the key theme is that have those commodity prices run up as far as they can go. And if that is the case, then again, we could see some weird price action with regard to the Canadian dollar and the Aussie and also the Kiwi as well too. So there's a few things going on, people in different currencies moving. You know, we saw dollar yen break out. That looks like that's going to continue. That's got to have that 110 is so exciting. We're right close to it. That's got to go, and maybe up to that 111, 112 area, which I think was pretty key. With 113, I guess, is staring us in the face as well too, which are the key levels. So there's a few key levels coming up in dollar yen, something to think about, and I think keeping an eye on those before possibly then that turns again. And so, you know, the driver often behind dollar yen is movements in the stock market. So again, if the stock market comes off, then we could well see some movement in the dollar yen down with the yen strengthening, right? So there could be some correlation between some of the movements, but for different reasons. And that's the key real point I'm driving to at the moment. Keep a lookout on what's going on and what's driving these currency pairs to get a real handle on the way that overall market direction is going to be going. We know that some of these currencies have been pushed to an extreme. Currency pairs have been pushed to an extreme, and the question is where they're going to break and bounce back again. So for me, I think that's probably it. No, one more thing as well too. So here's the interesting thing about inflation. Everybody's been talking about it recently. So there was a study done this week in the States saying, how concerned are you about inflation in the US economy? And over 77, I think, % of people who were surveyed were quite concerned. What was weirdly interesting about that was young people appeared to be more concerned about it than older people. I'm not quite sure what that means. So but let's just go with the fact that people seem to be very concerned about it. And inflation is often at the beginning of the inflationary cycle a expectations theory. So if you believe inflation is going to go higher, often it seems to sort of like eventuate, and that sort of adds like fuel to the inflation fire. Now, people appear to be thinking that way now. But this is early stages, and it can all go in the opposite direction quite quickly. So, you know, a big sell-off in commodities for one reason or another, the world getting its supply chain back into gear again would be interesting. Maybe stop running boats into canals would be a good start. But the thing for me is, I think it's important to bear in mind that if you're thinking about the inflation trade as being just getting started, I think you've got to look at that from a very broad cyclical sense. And I'm not sure you can trade that. If you're talking about the inflation trade being alive and well right now and driving markets and have people thought about it and positioned for it, then I think that's well and truly the case. So therefore, there's another argument saying, well, actually, if everybody's got this, then what's going to happen next? Who's left to buy the inflation trade, right? So do we see things starting to change there? And that would have implications for the likes of the cryptocurrencies and also some of those core commodities like copper and platinum, which have been doing incredibly well, right, over the course of the last few months. Some food for thought there about the future. And I'd like to do this at the end of the quarter, have a little bit of a roundup about what I'm thinking about key themes. Hopefully that made sense to people. Paul, back over to you.
Thank you, Julian. Much appreciated. Some great insight there from Julian. Always interesting to get the end of quarter roundup from you on the macro stuff, Julian. Look forward to a little bit more next week, and of course for you and me, an hour earlier for us next week, which will also